moving on from wheat, let's shift focus now to soybean. The soybean prices have surged after United States and China agreed to substantially lowering tariffs for the 90-day period. The US has cut duties on Chinese goods from 145% to 30%, while China proposed cutting tariffs on US goods from 125% to 10%. What does this really mean for the edible oil sector? Joining me on the show to talk about that is Sudhakarr Desai. He's CEO at Imami Agrotech and president at IVPA. Mr. Desai, hi, thank you so much for joining in. First of all, your reaction on this, because China is a big buyer. And do you see price reaction, as we've seen in the international markets yesterday, ease down a bit? And what does it mean for you as a sector?
Yes. With the size of 100 million tons of crushing in China, it's basically a market mover, definitely. And this particular move, after going up to 145%, 45%, and then coming back to normalcy, would mean that a lot of grains and beans and etc., which are offload to China and facing a uncertainty of tariffs and this and that, will get somewhat resolved. I think that's the good news for the global trade in this space. And China would typically buy about 60-70 million tons from Brazil, maxed out, and from US, normally about 25-26 million tons. So I think this trade resuming is a good news. But having said that, meanwhile, the US tariff revenues has gone up from $6.6 to $7 billion to about $15 billion currently, due to the increase in tariffs on many of the items. So while that may not translate immediately into inflation, these revenues in US, because the crude is down, but eventually it is creating some kind of an import fund out there due to these tariffs. But within the complex of soybean, it is a good news that the trade flows will, last time I said that trade flows are going to be tremendously changed, but I think this will put it back in the track.
The second point I want to talk to you about is the USDA report. So while Argentina and Brazil crops looks good, the overall world stocks and the US output, for that matter, is slightly on the weaker side. Do you see this meeting, there's a meeting point between the two, or do you find the USDA report bullish for the sector?
USDA report at the production level is like neutral, because they said about 4 to 5% lower acreage, but compensated by higher yields. But that's not it. With the exports that are resuming, they've actually surprisingly put the end stocks about a whopping 15% less. That is why you see the market has turned bullish for the beans, and eventually whatever is bullish for the beans is also going to be for the soy meal also, and for the sector, and eventually oil also. But there is one thing that is much awaited, is basically the biofuel policy. It also showed a symptom that the biofuel policy in US will be maintained in the same manner or improved. But when you look at it more closely, I think if the UCO is not coming in, and there is a question mark about whether canola will go in or not into biodiesel. So after all, this is about 15 million tons of biodiesel consumption. So if it is restricted only to canola and soya and no more used cooking oil and all that, I would see this as bullish Chicago also and bullish soya oil also. This is how I see it. As far as the global production is concerned, you're right, Brazil is 169 million tons, Argentina is 49, US at about 117 million tons. Does look like about 25 million tons of more soybean crop, but in terms of oil, it's hardly about 500,000 tons, which will easily compensate the UCO. And as you know, the demand for soybean oil has been very good. So this is how I see bullish beans and rest of the things. But the question mark is on biofuel.
Sure.
I think soon, on the 20th May, there's going to be a further meeting on the biodiesel in terms of how much of impetus it will get in the US soybean sector.
You mentioned a point about used cooking oil. What is the overall global market when it comes to that? And is India even a stronger percentage there?
No, not really. Right now, it is very negligent. In China, there used to be a used cooking oil which was objected by in US and Europe also. So I think that's a different ball game altogether.
Let's talk about the
But
Indian markets then. And when you look at the
yeah,
Indian dynamics, how are you looking at the import for the month of May and June? What is the kind of demand growth also that the Indian markets are looking at when it comes to edible oil?
yes, on the third section, which is the domestic oil and oil seeds, you have the ensuing mustard crop. Okay, looking firm because the crop size is a big mystery. I think people are talking different numbers, but the harvest pressure will come for a month or so. I think Indian stocks are tight because of the steep inverse in the palm market. People were buying hand to mouth, and now that the palm is really adjusted itself, I think India would buy and stock up some more palm. On the soybean domestic front, government has bought about 18 million tons during a harvest, but they've been consistently releasing about 3 to 4 million tons of soybeans into the market. So I think the consumption is a little bit question mark right now. We can't really say about consumption because it is the inventories which have come down because in the palm market the forwards were appearing very cheap, so nobody was buying a hand to mouth. But now the buying has resumed. So I would say before we conclude whether the demand is neutral or plus or minus 2%, I think we need another 3 to 4 months. And I expect import demand to resume. You are very well aware that the palm import demand has fallen to about 400,000 tons. I think India would require about 1.2, 1.3 million tons on average in the next 3 months, broken into palm, something like 700K on average.
Okay.
That is 7 lakh tons on average. Soya about 3.8, 4 lakh tons per month in the next 3 months. And sun oil, being a premium oil, would continue at about, let's say, 2 lakh tons. So in terms of global supply, I think well consolidated, stable. Indian demand will be good in the next few months. Palm market is supported.
Okay.
Much depends on the soya in terms of how much rally can it have above palm oil. I think that depends on the biofuel policy, which is going to be clarified somewhat in the rest of the month of May.
My final question really is on a price, because for most essential commodities, I mean, that really seems to be the narrative, really, that it is not a concern or a surprise anymore, monsoon being a positive there as well. How are you looking at the prices for many of these edible oil within the sector? And also, I know you have been pushing for a lot of government policies as well. Any conversations or updates there?
Yeah, the update is basically, as you know, the Nepal, SAFTA country, zero duty imports are scaling up to about 78 to 100K per month. We definitely, as IVPA, wanted some solutioning out there. It is there in the horizon. I think I'm pretty sure government would like to rebalance this anomaly, I would say, in terms of non-level playing field for the Indian industry,
Sure.
especially the ones who are located in east and northern parts. You know, it's very obvious that the Indian importer pays a 27% duty, 35% duty on refined oils, but whereas via Nepal or Bangladesh, it's going to be zero duty. So this is one aspect of it. Otherwise, the refined oil imports are continuing because of the inverted duty structure in the origin countries. So these two are our fundamental issues. Things are moving in that direction. Let's hope some solution will come out with your right questions.
Oh, well, absolutely, Mr. Desai. Thank you so much for joining in as well and throwing a light on the concerns that the edible oil industry looks at. And of course, as you said, that the imports will be higher in the month of May and June versus what we've seen in the first part of this year. Well, on that note, it's time for a break. But don't go anywhere. We will discuss the outlook on India's sugar sector on the other side.